So this is Jobs Day, and you have insight into a lot of jobs around the country and around the world. One of the things that we are really puzzling about is how many jobs we're adding, how many people are coming into the workforce, and yet we're not seeing real wage pressure. What are you seeing, both at Domino's and through your franchises?
Well, it's an awfully good economy for us right now. And so, first you start from the top line. And, as we do the analysis on our business, the biggest predictor of growth for our business is employed people. So more, employed people buy more pizza than unemployed people. And so the continuing job growth is a very good thing for the growth of our overall business. On the wage side and the labor side, it certainly is a strong labor market right now. But you're seeing some increase in wages. You're kind of a little bit under 3%. I think you're seeing actually higher growth than that on lower income employees, which I think is terrific. That's actually a good thing overall in the economy. To me, the key number, even as you see, unemployment down at 3.8%, is the workforce participation rate, still under 63%. I think that number can get up to 64, 65%. That's 2 to 4 million people that can still come into the workforce over the course of the next couple of years. So I think we're in an awfully good place right now. We're seeing people coming into the workforce. We're seeing the unemployment rate, continuing to inch down a bit. But I think it's the workforce participation rate is really what's preventing, a dramatic increase in wages at this point.
Which, interestingly, actually ticked down 0.1% in these numbers.
Yep.
Even as the unemployment rate went down, that went down evidently because more people were coming into the workforce. How many people are out there still who aren't looking for jobs but still could?
Yeah, I think the answer is, each percentage point of workforce participation rate is about 2 million people. And I think the U.S. has had a participation rate as high as 67% over the course of the last 10, 15 years. And so, you've still got a lot of people who could come back into the workforce that can help to fuel growth in the economies. But overall, I think it's an awfully good situation right now.
Going back to wages for a moment, Patrick, are you feeling any margin pressure at Domino's, or are you seeing your franchisees feel any margin pressure? Do you have to pay those drivers more money?
Yeah, we certainly are, and some of that is minimum wage increases, but as much as anything now, it's just needing to pay more to hire great people, getting more efficient with our businesses, which, from a delivery driver standpoint, which is the majority of the workforce in our stores, the more runs they can take per hour, the more tips they're earning. But we're certainly seeing some of it, but they're managing it well. The profits of our stores were up a bit last year versus the previous year. The cash-on-cash returns for our franchisees are terrific. Kind of a 2.5-year payback on stores. So overall, it's a very healthy situation.
That's one part of the macro story, Patrick. The other is trade issues. And you have stores in India, UK, Ireland, as well as 718 over in Mexico. How did the recent tariffs and the prospect of ramping up of trade tariffs affect your business decisions?
It really does not. Because, for each of those markets, we're dealing with those markets. We're sourcing a lot of our food locally in each of those markets. So, the tariffs and things going on with trade really don't have much of an effect on us.
What about the tax cuts? Are you seeing any effect? Particularly in people buying pizzas, for example. Are you seeing effects of the tax cuts yet?
Yeah, I think it has certainly been a good thing for the economy overall. I think that's going to help growth. We're certainly ramping up investment. We've done some things with benefits. We've increased our 401k match. We're doing better on kind of partner benefits and taking time off for when people have kids. So overall, I think it's been a good thing.
Quickly, gas prices are on the rise. Mortgage rates are on the rise. How does that expose your customers and change how they're going to eat?
Yeah, I don't know that mortgage rates are going to have any near-term effect, because most people, if rates are going up, they're just simply not going to refinance like they might have been before. Gas prices a little bit more. That certainly can eat into disposable income a bit. the levels we're at right now, I don't think you see a lot of that. We certainly, when things got up to $4, you know, back a few years ago, we might have seen some of it. What I would watch for from fuel prices, though, really is whether or not that starts to flow through into food costs. And that's something that we saw in the past. We're not seeing that at this point. We're still pretty good with our forecast for food, but that's the sort of thing I'd be looking for.